Hello and welcome, accounting students. In today's lesson, we are still focusing on partnerships, but we're now going to turn our attention to year-end adjustments and financial statements. So as usual, before I get started, I'm going to remind you guys to have pen, paper, your calculator in front of you so that we are working, we are learning together. So let's get started. Right, now as accounting students, have you ever wondered how the financial statements of a sole trader is different from a partnership? So that's what we're going to look at. How is the statement of comprehensive income, the statement of financial position, how are these different in terms of a partnership versus a sole trader? So let's move on. Right, so remember guys, looking at the big picture, we've obviously focused on unique transactions. We used the accounting equation for that. We also looked at ledgers as well as final accounts. What happens at the end of a financial statement? What are the final accounts that are drawn up? So in today's lesson, our key focus will be on financial statements, including notes to financial statements. Right, now some of the key concepts that I want you guys to focus on that we obviously going to come across in our lesson are as follows. So your statement of comprehensive income. Now remember previously we called this the income statement. Some of us are still used to using the term income statement, but remember I want you guys also to call this the statement of comprehensive income. Income statement is the old terminology. Similarly, statement of financial position. Previously, we obviously referred to this as the balance sheet, but remember the name has now changed and we need to get used to the new terminology, statement of financial position. Right, then another key word that you're going to come across, primary distribution of profits. What do we mean by primary distribution of net profit? As well as final distribution of profits. So please remember, as I'm completing today's lesson, we're obviously going to come across these terms, and I want you guys to take note of the difference between primary distribution versus final distribution. Right, let's carry on. Okay, so as accounting students, what happens at the end of a financial year? Now, from an accountant's perspective, we obviously know we draw up final accounts. So in our general ledger, we draw up the trading account, the profit and loss account, as well as the appropriation account. But remember, not everyone understands ledgers, including perhaps the owner or the partners. They don't necessarily have that accounting background. So as the accountant, you then take the ledger and you present it in the form of financial statements, which is much more reader friendly. So whether or not you understand accounting, you will understand statements. So hence the reason for us preparing financial statements. Because remember, as accountants, all we need are ledgers, and we can make important financial decisions based on the ledgers that we prepared during the course of the year, but not everyone understands accounting. Therefore, we take the ledgers and we now present the ledgers in the form of financial statements. The accountant will draw up financial statements which consist of your statement of comprehensive income, which obviously is the income statement, to determine net profit, and then also will draw up the statement of financial position showing all your assets, equity, as well as liabilities. So again, this happens at the end of the financial year. Okay, let's move on. Statement of comprehensive income. Now remember guys, you've done this before. So when you were the accountant of a sole trader, you drew up the statement of comprehensive income. Is this now going to change? So let's find out. Remember, there are no changes to the statement of comprehensive income, and here I'm referring to in a partnership. It's exactly the same or very, very similar to your sole trader. Additional income and expenses may include profit or loss on sale of asset, provision for bad debts adjustment, and then you could come across a partner could be taking stationery or any other consumables for personal use. So I've given you examples of additional year-end adjustments that affect the statement of comprehensive income. However, the layout of your income statement of comprehensive income is exactly the same as a sole trader. So in other words, you're still going to start off with sales, cost of sales, work out your gross profit, add other income, minus other operating expenses, and so on. So that's not going to change. Right, let's move on. Statement of financial position. Does the balance sheet change? And the answer to that question is yes. So if you look at your statement of financial position for a partnership, the equity section of the balance sheet, guys, please remember when I use the word balance sheet, remember I'm referring to the statement of financial position. Okay, it's going to take me a bit of time to get used to the change in terminology, but I know you guys know exactly what I'm talking about. So what are the changes that's going to occur in the balance sheet? So you're going to find in the equity section of the balance sheet, remember we've got A, then we've got O, and we've got L in our balance sheet. So obviously I'm referring to the owner's equity section. So the following changes are now going to take place. You're going to include capital as well as current accounts, and you're going to find that there will be a note prepared for capital and a note for each partner's current account that will then be reflected in the statement of financial position. Okay, right, let's move on. So looking at the capital note, and I've got a quick example here to show you how the capital note is going to change. We're going to list the names of our two partners. Remember, in your syllabus, you will come across two partners, not necessarily more than two partners. So in this particular note, I am going to show their capital balances at the beginning of the financial year. So if we look at the example that is in front of you, partner Anele contributed 1 million, while partner Vish contributed 1.5 million. So obviously this is their opening balances at the beginning of the year. Then looking further, what was the additional capital each partner contributed, or was there a decrease in capital contributed? Now remember, they could be both. Partners could increase their capital, additional capital, as well as decrease their capital during the financial year. So this is now reflected in the note. So looking at the example, Anele contributed an additional 300,000, while partner Vish decreased his contribution, hence the brackets to show that capital is now decreasing. He decreased his capital by 200,000. So as you can see, this is reflected in the note. And then finally, what are their balances at the end of the year? So if you look at Anele, her capital increases to 1,300,000, while partner Vish, his capital obviously decreased by the 200,000 to 1,300,000. Okay, so clearly we can see that the changes are reflected in the note, the capital note. Right, let's move on to the next change. So our next change in the statement of comprehensive income, statement of financial position, not comprehensive income, financial position, is the current account note. Now remember guys, while doing a sole trader, we never prepared this particular note. So obviously this is now completely different, completely new. Right, so what are we going to find in this current account note? So the current account note indicates the primary and the final distribution of net profit amongst the partners. Right, so what do we mean by primary distribution? Here we're referring to the annual salary that was allocated to each partner, their interest on capital, as well as any bonuses that were given to partners. So that's what we mean by primary distribution. Final distribution, on the other hand, looks at the sharing of remaining profits. Now, right now, I'm obviously discussing the note, but in our next segment, I'm going to do an example with you. But I want you guys to listen, take note of the terms that I'm explaining. Right, what else does the current account note indicate? It's going to also indicate the amount of drawings of each partner for the financial year and their respective current account balances at the end of the year. So in other words, drawings, how much for the year they've taken from the business, and then at the end of the year, remember we discussed this in the previous lesson, what you were entitled to take versus what you've taken. So for example, I was entitled to 100,000, I have taken 90,000, and at the end of the year, I end up with a balance of 10,000. That is my current account balance. Obviously, it's favorable because I haven't taken everything that I was entitled to take. Okay, right. Hopefully, guys, that made a lot of sense. What I want to do now is I actually want to stop. I want you guys to go out for a quick break, whether it's to the kitchen to grab that glass of water, whether you want to walk around a bit, do that, and when we return, we will go straight into an example where I'm going to draw up the current account. So I'll see you guys in a bit.